Bernardo, first of all, welcome to the Latitude podcast. It's great to have you here.
Brian, thanks so much for the invitation. Happy to be here.
I've said this a few times in recent episodes where one thing I love about Mexico City is that you just randomly run into people, and you happen to be at the school where my kids go to school because your kids go to the same school. And so I think we were at like a little alumni football game, football norteamericano, right? And there you were, and I'm like, wow, this is a small community. It's a big city, but a small community. So I'm glad that we have been able to hang out a handful of times. I loved having you at our event last week at Launchpad, and so I guess you've been pretty busy, also, right?
Yeah, so great. No, I mean, first of all, I think the ecosystem, entrepreneurial ecosystem in general, I mean, it's obviously grown a ton since several years back, but it's still small. No, it's still a community that we have to make much bigger. And I think that's a huge part of what you guys are doing at Latitude. And I think that's going to continue helping everything that we're doing on that end. But yeah, a small community is great to be a part of.
We'll go through a little bit of leading up to Flat and kind of what you're doing now. You're a serial founder. You've invested a ton. You even co-founded a venture builder. So what's in your upbringing, your personality, your background, your studies, your early career that influenced kind of the multiple missions you've had that have now taken you to building Flat? But would love to hear a little bit more about kind of how that all transpired.
Yeah, so it's a good question. Also, I think it's not one thing that you can say, hey, I can attribute this thing that happened to kind of pushing me in a direction of being an entrepreneur, trying to build things. I think it's several things, but I think it all goes back to family always, and I think it from a young age, my parents at some point when I was 3 years old decided to kind of pick up our bags and go and move from Mexico to the US, lived there for many years. And my parents basically went without an idea of exactly what they were going to do there. And they built a life for us there for many years. And I think my parents in general have always had this vision of taking chances, taking risks for the better of the family. And I think that's always stuck with me. And I think that's stuck with the rest of the family as well, right? My brother is also an entrepreneur. He built a company called Lalix. And that was a great example for me of saying, hey, we can build stuff and we can do stuff in the country and on our own. I think you put all that together, and I think I've always had this vision of we can create change in the environments that we're in. You can make mistakes. They're not always going to be the right decisions, but it's part of the journey, And I think that's what's always driven me, like creating journeys that really are worthwhile.
How do those experiences with your family and now that you have kids, how does that change your perspective and how you raise your kids?
So this question has come up kind of the other way around. And you mentioned that we'll probably go into this a little bit. Through that journey of doing different things, there's been chances of getting good corporate, typical jobs in the market, which were hard to say no to at some point, because you're raising a family. I have 3 kids, and you start to ask yourself, hey, I better make sure that I'm able to give them a good life. I should probably go for that safer route. And I think that question that I always come to, or the answer that I always get back to is, what do I want to teach my kids, or what I want them to see? And I think what I always go back to is I want to be able to tell my kids, and I want them to be able to see that it's all about the journey, right? And if I make decisions just on, okay, what's going to be the best paying job today? What's going to be the safest route for me? That's not what I want for them, right? And it might mean I can take them on more trips, or it might mean I can give them certain experience in life that I can't give them as an entrepreneur. But for me, it's much better to be able to tell them, hey, take chances, take risks, enjoy the journey. So I always end up back in this decision of doing stuff I probably shouldn't be doing. You have to ask my wife if she agrees with everything that I'm saying, but that's basically what we've been trying to do.
Yeah, I bought my wife early on in our relationship the book. If you've ever heard of it, it's called Surviving and Thriving in a Relationship with an Entrepreneur. Have you ever heard of that?
No, I haven't seen that one.
Yeah, it's a book by Brad Feld. Brad came on my podcast, I don't know, one of the first episodes, and he wrote Venture Deals, which is probably his most well-known book, which I also read on my way to go visit VCs on Sand Hill Road, like on the plane to go visit them. And so, but I bought this book, and it was cool. It was like a joke, and then we like both read it, and we're like, oh, there's some good little nuggets in there, because it does put a little friction on the relationship. It's hard to balance family, and particularly while you're trying to build something. Because, I mean, did you come from an entrepreneurial family?
So as I said, they were always risk takers in life, being willing to go somewhere else, being willing to go to a country without a job or a set plan. And I think they did it many times. They have had entrepreneurial journeys, but I wouldn't say that my parents come with this huge entrepreneurial background that I tried to copy or emulate. But it was much more kind of that set standard of, hey, take risks, enjoy the journey, etc.
That's good. They were supportive. They're nice to have that.
So going back to that, I would say it's interesting, right? Because one thing is to understand, and I think as a parent, like taking risks, it's one thing to make the decision on your own. But I think it's also harder for them once it's me taking risks, right? Because, and we had many conversations along the path, and I told you about some chances of taking these bigger jobs with much safer, much better salary, etc. That's when it started to be hard for them. I'm seeing my kid, he should take this job, which is going to make him set with his family, etc. So I think many times it's easier for you to take risks on your own than it is to see somebody else take risks.
I totally agree with that. Let's double click a little bit on your journey and start with your first business, because you're at Linio, which turned out to be a very large e-commerce company. In fact, if I look at the ecosystem in Mexico, the lineage of startups, a lot of it goes back to Linio, right? And I'm sure you can think of a bunch of other entrepreneurs that were part of that story. Did that serve as like a great kind of like opening point for you? And talk a little bit more about how you see that and the role that it played in the Mexican ecosystem.
Yeah, so I think if you go back to 2012 when we started Linio, there wasn't much going on in the ecosystem at the time. You know? If you think about a startup creating technology locally, it's hard to point a finger at many others, especially at that scale, right? When you're talking about doing tech in Mexico at the time, it was more going to work for a Google or Microsoft, etc., rather than really creating a company and creating technology locally. And I think Linio was one of the first where we were pushing and we were creating that tech locally and really creating big scalable business. And I think that attracted a lot of talent that saw that as an opportunity. And I remember along the way, and we did, and I talk about this a lot, and I think we did a lot of things right, we did a lot of things wrong. But I think one of the things we did get right at Linio was the type of talent that we attracted, right? And I think you always have this decision of bringing on experienced people that have been through different things. And here we always had a vision of how do we bring talent that we know are going to come, and they're going to come to learn, and they're going to come to build something. And that might mean that they're going to be gone in a year or 2 years because they're going to want to do something afterwards, rather than bringing on talent that we know will stay with us for 5 or 10 years. And we took a very direct decision of, okay, we'd rather have a lot of movement, we would rather have a lot of churn, but let's bring the best talent that's hungry to build stuff. I think that led to this ecosystem where a lot of people came to Linio, they would go there for a year, 2 years, and afterwards they would go try to build something else. And yeah, I think you see it in the ecosystem today. I think if you go to any big tech company locally, there'll probably be some ex-Linio there. And I think that's one of the big things that we were able to achieve with the company.
How do you balance just the continuity factor, right? Like I agree that there's bringing those people that have like entrepreneurial drive, and the impact can be sizable, but it can be disruptive at the same time if someone's only there for a year or two, right? So how do you kind of balance that where you're not a springboard for people, but at the same time you're fostering a mentality of ownership?
Yeah, so I think for us, there is a mid path, but I would sum it up in saying, you basically have two choices, right? You can decide to bring a subpar talent that will be there for a longer period of time, that you're going to be comfortable, that there's not going to be a lot of movement. Or you could be more aggressive at, hey, let's make sure we bring the best talent. There's going to be some rotation, but more very good talent is going to want to come on board. And I'd rather be more swayed towards, let's bring in the best talent. Let's make sure that more talent's going to want to come on board, even if that means there's going to be some rotation. Now, there's definitely things that you can do in the middle, no? And for example, one thing that we've done at Flat, every single person that works at Flat today has some sort of equity, has equity in the business. They're owners of what we're building. And that's a great way to build that stickiness where people are here not just for a salary, but they're here for a certain mission. And being here for a mission means that they want to see how things play out. You look at our core top management team, they've been with us for a very long time. If not, they've been here from the very beginning, right? And I think that's a part of both this, how you create that equity structure, make them owners of what we're building, but also make sure that they're driven by the mission. But going back to where I started, it's much better to make sure you have the top talent, even though that you know that at some point down the line, they might want to do something else.
Yeah, I agree. I had a few examples of people that joined me on the journey, and they were very high caliber, and they were upfront with me and like, hey, I want to stay here. It's going to be 2 years, or it's going to be a year or two, and I want to help you with X, Y, Z, and then move on and either start my own thing or move on to new challenges. And I think that it's your job as a leader of an organization is to engage too. Like if the person joins and they're high caliber and they have big ambitions, and then you become a really ambitious operator and the company is successful, then they end up staying longer because they feel fulfilled because they're contributing something of value.
Yeah, I think there's a lot to be said around how those people and those teams and those key contributors can really create companies or initiatives or new things that we're building within the company, right? And really having that responsibility of, hey, I'm the owner of this, right? And this is what I'm creating today. Is what we've seen really marks a difference between those team members that want to stay on long term and those that want to go somewhere else.
Back to Linio, you started that in 2012, you said? And so
2012.
Yeah, so not a lot of e-commerce, right? At the time. It was starting to pick up, I think, but the general thought is that Mexicans preferred brick and mortar stores at that point. So what was the impetus for starting it, and how was, from a timing standpoint, was it the right timing? What did you learn from those like early days?
Yeah. So there wasn't much going on, right? As you said at the time. No, I'd say the only relevant player at the time was Mercado Libre, obviously an amazing company. They're a lot more focused on C2C at the time. Obviously that's changed. But you think about B2C e-commerce in the country, it basically didn't exist, right? And what we saw is there's always these things that you hear in the market. When you hear them as an entrepreneur, they kind of click and you say, wait, I don't believe that, right? And you mentioned it right now. What you would hear in the market in Mexico was, yeah, people in Mexico don't really like to buy online, right? They rather go to the store, see the product, touch it, pay in cash, take it home with them, negotiate the price probably, and that's the type of experience that the Mexicans want when they're buying something in retail. And for sure, there might have been something of that. But at the end of the day, when you look at the world and you see everything that's going outside of Mexico, it was very clear to us that there's going to be a radical change on how people buy. And it was no different for people in Mexico. No, the problem was, it's not that they didn't like to buy online. It's that there simply wasn't anywhere to buy online. And that's what we tried to change with what we were building in Mexico. But it was tough. No, I mean, it was an ecosystem where nothing really worked, right? I mean, if you looked at payments at the time, you couldn't really charge with credit cards. I mean, we were getting 40% acceptance rates at the time. And that's if people wanted to use a credit card online. We had to go bank by bank, pleading banks to be able to accept certain credit cards. Logistics was much more B2B. We were sending documents to office to office, but there wasn't big logistics networks to send furniture, to send TVs, and we had to do a ton of work there. Data was extremely expensive at the time. And there's a lot of these things in the ecosystem. For us, we weren't just building a company. At the same time, we were spending a lot of our day in how do we make that ecosystem work? And I think that was one of the most interesting parts of what was going on in Linio at the time.
So you left Linio and you co-founded a venture builder for LATAM, fintechs, which in 2016 was pretty early. The fintech ecosystem is still evolving. I don't know if that's the time when people started calling it fintechs. I don't remember. Like I remember when I started, no one called it a proptech, right? It was just a real estate tech company. So what made you want to move away from big e-commerce and get going in kind of the fintech space? And what did you learn from that experience?
Yeah, so I think it was related to a lot of the things I was seeing at Linio. No? So when we were building the e-commerce site, there's a lot of financial products that we wanted to do within the company, right? We launched a credit card at some point together with a bank. We were looking at giving loans to some of the suppliers. We're also thinking about, hey, what happens if we give credit to some of the buyers on the site, et cetera. But the more we turned around and tried to do this with partners in the market, we quickly realized that there was basically nothing there that we could partner with. So I think that was one of the first things that when I was thinking about next steps, it was very clear to me that there was a ton of opportunity in products that were around financial services, et cetera. And I think that matched really well with a chance encounter with Victor, who's my co-founder at Flat and was my co-founder at the fund, where he came to Mexico looking to do things in fintech. And he came with this idea of, hey, what happens if we invest in fintech? And it matched really well with everything that I had seen in the market, and we decided to launch the fund. But I think it was that, just realizing that whenever you wanted to do something along those lines, there was nobody building anything at the time. I think there was a handful of fintechs at the time. So for us, I think it was interesting time.
So you spent a decade plus kind of in tech in Mexico. If you were to blank slate, you're not building Flat, which we'll get into in a second. Where do you think the opportunities are in Mexico and Latin America? Like if you were to place a bet, it could be, you can ask the question more broadly, like sector or stage, but like if you had your pick of investing and putting energy into something besides what you're doing right now.
Yeah, that's a tough question, but I would maybe take a step back and talk a little bit about the evolution of what we build and how we build in Latin America. No, I think something that is very interesting is I think we've gone from what I was saying before of, hey, if you're talking about tech in Mexico, it was going to work for Google or Microsoft, et cetera. And then we evolved into, okay, now we can build products here, but we're building products that were similar to other products that we saw around the world. And those products were built for the local market. And I think something amazing that has happened over the last few years with COVID, with everything that you're able to do over video conferences, all of a sudden you can have access to this capital that you didn't have access to before. You have access to talent that it was hard to get, et cetera. All of a sudden, I think we're going to start going into that stage where products are being built for Latin America, for the world, and not just for Mexico or Latin American countries. I think what we're seeing is that before, because there was such access to capital and talent in San Francisco and in the US, et cetera, the products had to come from there. And there was just no way to compete against that on a global scale. But it's very hard to understand from Miami or from San Francisco how to build a product for India or how to build a product for Africa or how to build a product for Latin America. I think it's going to be very interesting how that evolves. See how these companies from countries like Latin America can start building companies for the world. And I think that's one evolution that excites me a lot, to see how that starts to take shape. And that's one. And then to go a little bit more into your question, I think there's a ton. I think when you think about the difficulties that people have at countries like Mexico, I think there's still a lot to be done around solving financial services. I mean, we're still very young. We've gone through the phase of building, I think, the basics, but I think there's a lot still do there. I think there's a lot to do around climate. I think there's going to be, we live it every single day in Mexico City in terms of pollution, et cetera. So I think that's going to be another vertical that I think we can solve from here for other countries as well. Stuff around genetics, I think there's tons of opportunities there. So I think there's so many opportunities and things to continue building that there's going to be exciting in the next few years.
I agree with that. Yeah. And I do think that the size of the vision of Mexican founders or Latin American founders has gotten bigger, I think. If you look at, you've got like Cesar from Gympass in Brazil that's building a global company, what David has built, at Nubank.
Going back to my point of that next evolution of LATAM and how we can start building products for other countries and for the world now that there's more access to capital, now that there's more access to talent. How's that going to play out? Do you think San Francisco and Miami keep winning, and how does it compare to what we can do here?
I think that the massive acceleration of remote work has helped companies be more distributed. I do think that for early stage companies, it's very difficult to get to product market fit when you're all spread out across the globe. So if you have teams, we experienced that. It's easier to lock yourself in a room and kind of just go deep on a problem. So I think that'll be something that, but I do think that the decentralization of tech and Silicon Valley is in the cloud. And so I think that there's a tremendous opportunity now where you can build for other parts of the world. I got a message from Manu from Yalo this morning, and my first message, I woke up and I saw his message, and he's in Nigeria, and he's selling in Nigeria. I'm like, man, go for it. That's a boss move. And so Do I think that's like a thing that we would see normally? Not when I started. Like that would be totally like crazy. But I mean, I was talking to their investor from B Capital, which is Eduardo Severin's fund in Singapore, and they opened an office in Miami, and they invested in Yalo, I think, and I think they come down to board meetings. So like, there's a Singaporean fund investing in a Mexican entrepreneur that's building in Nigeria, selling in Nigeria, right? I don't think that's a pre-COVID situation.
It's not a pre-COVID, and I think it goes back to what I was saying before. It's you need the talent, you need the best talent, but you also need to understand the customer, right? And who's going to understand the customer better? We'll see, But my argument is, I think people that live in developing countries that are really changing the everything that's going on, those are going to be the people that are going to understand customers and their journeys and what they're living through. I think that's going to be a huge advantage.
Yeah, it's not the American neobank that built Nubank. It's the Brazilian that it's the Colombian that went to Brazil and understood the problem better. And I think that there's definitely more similarities in emerging markets than with the US or Europe. And so I think that they're going to see more founders that hop a plane and go to Southeast Asia. And at the Latitude event, there's a woman in our last cohort who's from Russia. She flew from Russia and she's here building in Mexico, right? I mean, yesterday I talked to some Italians that are building a business here, raising capital in the climate space. So like the world is definitely flat. Like I remember Thomas Friedman reading his book, The World is Flat. I think I was like 25 or something, and his book came out, and I was like, I just mowed through that thing, and it was really a precursor to what was to come with the internet. And we've seen like a world is flatter kind of situation, nearshoring opportunity in Mexico. So I think there's a ton of, tailwinds for emerging markets in that standpoint. I think the headwinds are the capital allocation is yet to be seen how that's going to be distributed. And if in this particular cycle, we won't know how that plays out. I think that it's going to be harder for growth stage companies in the short term, but been in the market for 10 plus years. And, I worked at my first internet company when I was 19. And so I saw the .com crash. I saw the 2008. I started a business in 2008 and I'm still going, and we know these are cycles, right? Like they're not forever.
It's part of the game.
Absolutely. Let's talk about what you're building now. I mean, look, you've had a couple opportunities. You've been on the entrepreneurial side, and you jump to the investor side, and then you jump back in to building. So you're building Flat. I think on a panel recently when you were there, and I said I screwed up by not investing in Flat because we spoke early, and I have no problem admitting my mistakes. But
we'll remind you of that one for a while.
Yeah. Well, talk about the impetus of Flat, and you can give a quick overview of the business model, and then about how the initial idea came about. I know the problem quite well, but maybe share with the audience.
Yeah, for sure. So I mean, when we were investing in fintech, Victor, myself, we were always kind of mapping out what was going on in other industries. And we started to see a lot of similarities between what we saw in fintech in 2016 to what we were seeing in real estate and proptech in Mexico. We saw huge industry, without a doubt, one of the biggest industries in the country. But at the same time, one of the industries that had been less touched by technology or less changed by technology. And you put that together with an ecosystem where a lot of things didn't work, right? You think about real estate in Mexico, it's a combination of problems, right? You have an industry where there's no data, right? People don't really know how much their homes is worth, and that is crazy. How can you transact on a product where the seller doesn't know how much it's worth and the buyer doesn't know how much to pay for it? It's an industry where the sector that transacts is less professional than it should be. So somebody can wake up one day and say, I'm going to start selling homes for a living. And there's some amazing brokers, but it's still an industry that needs to be more professional. And then just the process of selling homes through notaries, getting financing for it, just extremely difficult, right? You put all that together, and on average, it takes people to sell homes over a year. Go from a year and a half to try to sell a property, and that's crazy. So we saw that. And I think what we saw that what we thought is different from more developed economies in real estate. What we thought is what we have to build here, rather than solving a niche issue, is how do we create a new ecosystem in how you transact in residential real estate in Mexico. And that's the thesis that we start off. We need to create this new ecosystem. Then the question was, what do we do, and where do you start, right? And where we started from was, hey, we need to solve the transaction, right? Because if we don't solve the transaction, anything that we build around that, it's not going to work. And for us, that way to get into the transaction was to start with iBuying, right? So we started to buy homes. We would buy those homes, remodel those homes, and then sell them in the market. And then we started to build on top of that, right? We started to build a brokerage on top of that. We built out a marketplace. And then that's been evolving over time, right? And again, as everything changes, as the markets change, as we start to listen to customers, et cetera, we've been evolving that strategy as well. You know? So today, we're not buying homes and we're reselling homes. We've changed that to doing brokerage. We've changed that to somebody that wants to sell their home. We will finance them. You know? So instead of us buying that home from that seller and telling them, hey, you're going to have to take a big discount on this home for me to buy it from you, what we're going to do is we're going to give you financing so you can use that money while you're selling the property to either buy that next home you want to move to and get the down payment, or for personal needs that you need while it takes you that year and a half. And that made us much more capital light. It made us much more efficient. It allowed us to scale faster. So you look at our business today, and I think we're very close to that vision of building out that full ecosystem, right? We've built out that home brokerage. We have that marketplace with brokers and developers that are listing their properties with us. And then we've gone really strong at financial products, right? So we do mortgage brokerage where we help people with financing. And then we have this product we call Advance Your Sale, where we're helping people have liquidity for the properties that they're selling. And all of this, we put it together, also backed by a data business, right? So we bought a data company earlier this year called Intelimetrica, and that's a huge part of what we're building and how we're making much more transparent the pricing in the market. But yeah, that's what we've built over the last few years.
Did you make the, kind of the evolution away from the iBuyer just because of the kind of like macro situation? Because obviously in a high interest rate environment or expanding interest rate environment and current economic climate, which capital intensive businesses are a lot harder. Did you start doing that before the shift in the kind of the economy, or was this something that you kind of anticipated and it was a wedge for you to get in and then build your business on?
Yeah, so it's a combination. We had already started shifting before there was a big turn in the market, and that's why we had already built out a lot of what I was talking about before. But I would say there's two things. No? And one, without a doubt, is the market and being much more capital light, being able to scale a business faster. But I would say another big thing is we're the customers. No? So when we were talking to people that are selling their homes and we were buying those homes at a big discount, what would happen is we were leaving out a huge part of the market, right? Because most of the sellers would tell us, hey, I'm not willing to take that discount. Sure, I'd love to be able to sell my home in a matter of days, but I'll just try something else meanwhile, and then I'll get back to you if it's something that's interesting down the line. So what we realized is that if we shifted it much more towards this financing product that we have today, that could just open up a TAM that was much, much bigger than what we could solve there. So when you put together what we are hearing from the customers, when you put that together with what was happening in the market, and then you add on that the way we built this out just makes us much faster being able to scale out the business, it just made total sense to continue going in that direction. But at the end of the day, what we've built out with this platform is we can plug in and plug out what is working in the environment, what we're hearing from customers, and just keep layering on solutions onto that. And I think that's made us very flexible at what we're able to offer at a given time.
Talk to me a little bit about that process. I mean, like, you're servicing your customer a certain way. Maybe you have the brokerage arm, and then you just keep running into finance issues, and then how do you test, validate, and then decide that we're going to double down and scale? Walk me through that process of tangential business opportunities.
Yeah, so for us, it's exactly that. I think many times it's customers asking us if they can do something with us. So you would have a seller in this exact example, we would have someone that we would go and we'd give an offer, and we'd probably give them an offer, 15% below market to be able to buy their home from us. And they would tell us, hey, it seems interesting. I can sell my home in 10 days, but all I need is enough money to be able to do the down payment on the next home. And I don't want to sell my original home at below market price. Is there any other solution that you have for us? And usually the answer was they would come back or the team would come back and say, hey, we have a customer that has this issue. Is there anything that we can do for them today? And we would try to find a way to help them, and say, okay, let's try out. What if with this customer, we try out, maybe we can't do it on ourselves because we don't have the capability of doing that, but let's go with some partner and try to give them a loan and then go from there. And then we would test that out with more customers. right? We would get the next 10 customers that would come to us and say, hey, we have two options. We can buy the home from you, or we could give you this loan. And we started to realize that that was a product that was more interesting. And that was before building anything else. And then once we had enough information from the market and from the customers that said, hey, this is potentially interesting, then you go into the phase, okay, let's ideate exactly from what we've learned over the last couple of months or whatever on this product. How do we build out that original MVP, right? And then you go into actually building something out. And then you just start iterating on top of it. But that's usually the process that we've had. We see it across everything that we're doing. You look at our third-party marketplace with what we're doing with the developers and what we're doing with brokers. It seems like every month we're working a little bit on dynamics. How do we create those relationships? How do we incentivize more inventory? How do we incentivize more sales? It's just a never-ending process where, hey, we've been at it for more than 3 years, and we continue to iterate at how do we continue to serve our customers. And our customers are either sellers, customers are buyers, but customers are also the brokers and the developers.
That's the whole YC mantra of talking to your customers, right? That you had firsthand experience when you were one of the batches a couple of years ago, right? Was it 2019 or 2020?
It was summer 20, and I think it goes a lot to. I think when you're a first-time entrepreneur, you always think that the product you start off with is a product you're going to have 5 years down the line when you're more advanced. And I think once you've been in this for a while, you realize that what it's all about is starting with something on a vertical you feel strongly about with a vision. But at the end of the day, the customers are going to push you in the direction of how do you actually solve those problems and how do you iterate as fast as possible to listen to those customers.
Yeah, it is funny how that, I think that first time founders believe that they have this vision and that things are going to happen exactly how they expect. And that's the kind of the Mike Tyson phrase, everyone has a plan until they get punched in the face situation. And that's just the truth as a founder, right?
And I would hear it before, but I remember going to talks where there'd be a panel of VCs, and the VCs would say, hey, yeah, no, what I invest in is just great founders, not necessarily the idea. And before you've done anything along these lines, I would hear and I'll be like, nah, I don't know. I mean, it's interesting, but if you hear an idea like Facebook, of course you're going to invest, But then you realize quickly that it's almost the exact opposite, right? It's if you invest in the right founders, those founders are going to end up finding product market fit. You're going to end up finding how do you solve those customer solutions, because whatever you start off with, both from a product point of view, but also from a macro perspective of what's going on in the world, it's just going to change so dramatically across that journey that you better have a very strong team trying to solve these problems.
Yeah, I think that particularly at the early stages, right? No one has to figure it out. What was your kind of investment philosophy when you and Victor were deploying checks? Did you guys have a thesis, specific thesis? I know fintech, but were you looking at certain early stage? Were you really emphasizing the founder? And what were the things that you kind of look for? And what was the most common advice you found yourself giving to founders that maybe has evolved over time?
Yeah, so I think STARTegy, the fund, was the exact case again of also iterating on the model, right? And we started off as a company builder, right? Where basically we were mapping out the ecosystem, seeing what opportunities there were in fintech. And our vision was, hey, there's so many opportunities in fintech today. There's entrepreneurs that want to start something, but they're going to start something for the first time. So they're going to need a lot of hands-on support. We better build out an ecosystem for them to be able to help them out, et cetera. And we started that way. And I think over time, we started going much more towards, hey, let's just do a very early stage seed fund or pre-seed fund where we're being first checks into companies. And what we're going to have to do is just find the best founders, and we're going to trust that the best founders are going to be able to build on that vertical that they're working on. And that was an iterative process of seeing, okay, what was working, what was not working with the fund. And I think those took us to some very successful investments that we made. And our philosophy was exactly that. Who are those founders that we believe in, that we can back even before they have that full idea completely mapped out, but we're completely sure that they will find the right path as they move forward. And we've had great success stories there. We invested, we were first checks into companies like Belvo, Clar, Worky, a lot of these companies that have done amazing jobs in fintech in the space.
How did you source the companies? Like, what was your main channel or way that you were able to get in contact early with these founders?
So it was being a part of the ecosystem, no? So I think one of the challenges when you're on the investment side is to make sure that you're not an outsider in the ecosystem and try and have those founders necessarily just come to you, but much more so being a part of it and understanding who is who and what they're building, especially if you're an early stage fund. You know, if you're an early stage fund, you need to find out what people are going to build almost before they start. So a lot of it for us was we knew where the talent was going to come from. No, the talent was either going to come from somebody that was working at a bigger tech company that now they wanted to start something new, similar to what we were talking about Linio before. Now, who are those kind of second tier people within the company that were then going to try to start something new? We tried to seek out from those top companies who was building. We would go to, there are several ex-consultants as well that they're trying to get away from the consulting world and go more into entrepreneurial ecosystem that we knew that they were ready to build something. But really find those pockets of talent where we felt that that's where those entrepreneurs were going to go from. And it was everything. No, it was calling people to figure out who was building. It was being at events. It was LinkedIn. Found a couple of entrepreneurs literally from finding amazing talents on LinkedIn that we felt that those were going to be potential talents to build something later on. We would maybe meet them a year before they built something. So I think it was that.
Yeah, it's identifying kind of recognition of like the profile that you think is interesting, and then early relationship building then.
Yeah.
Well, listen, wrapping up, maybe you can articulate your vision for the future of what you're building. But how do you kind of imagine the future of real estate? I left my company in essentially 2020. We sold the company. I left the CEO in 2017. A lot's happened over the last decade. There's a lot of players. Do you see consolidation? Where do you see the trends in the future for real estate? I like to joke that I'm a little dinosaur now in the real estate world because I started with the classifieds model. It wasn't very sexy. It was a pretty good business, but clearly the transaction has kind of supplanted just the advertising model. So where do you think things are going, and where do you see yourself kind of playing your role in the future of proptech?
Yeah, so I think for us, it's kind of going back to everything we're saying about solving the customer's issue, right? And if you look at what you need to build to solve customers' issues in real estate, is how do you solve the full transaction for them, right? Today, it's not enough to help them on the discovery phase. It's not enough just to help them at the end of the transaction. But really, how do you help them through the discovery, through the transaction, everything that you need on the financing side? And that's why we've taken so much time. And that's why our vision at Flat has been, how do we go very broad on creating the solutions? So I think different from other players in the market, what we took a very clear strategy on was, instead of taking one product and trying to go across markets, et cetera, let's stay within Mexico at the start and then go very broad. And that's why we built out the marketplace. And that's why we built so much along the financial services aspect. But the player that's going to win for us, it's what is that player that's able to use technology, that's able to use data, that's able to build these products on top of that infrastructure to solve the complete customers' issues in the market. Now, what's going to happen in the future in terms of the different players, et cetera? I think we'll definitely see consolidation over the next year or 2 years across markets. I think as you see windows start opening up for IPOs 2-3 years down the line, those players, you're going to need to have presence not just in one country. You're going to have presence across Latin America to really build out these big solutions that you're able to drive capital across the region, across those businesses. So you'll see some consolidation over the next year or 2 years in the market. The products that will end up winning are these full end-to-end solutions that you're able to use one same expense, one same CAC to really drive different products across the customers.
What's your philosophy on frenemies? I was at Four Seasons the other day, and I caught up with my former main competitor, when I was building Viva Real, and we stayed friends and frenemies. Like, we were very intense rivals, and it was a head-to-head battle. Do you feel like it's important to talk to your competitors? Are you more of just like head down, don't care what they're doing? How do you think about the competitive landscape in general?
Absolutely. So I think for me, I think it's extremely important to be close to everything that's being built around you and around the company. You go back to my e-commerce days, and kind of similar to your experience with your competitor. You see my good friends from the e-commerce industry today, and they were all competitors at the time. Today my best friends from the industry are people that have worked at Walmart, Mercado Libre, and a lot of these companies that we were competing with at the time. And we were able to build a lot of very interesting things when we got together. One of the things that we didn't mention today, I founded the e-commerce association in Mexico called AMPO, where we founded an event called Hot Sale, which is one of the biggest sales events online in Mexico. And we built that together with competitors in the market, right? Because we were able to come together and say, okay, we're not the enemy today. No, the enemy today is the 98% of what is transacted in regular retail. And the way we compete is we come together. Maybe 5 years, 10 years down the line, we're going to have to figure out who's going to win. But today there's a lot that we can do together. I think it's the exact same thing in real estate today. If you look at all the proptech players that are in Mexico, we might be 2-3% of the market, right? And if we're not working together to improve things in the market, we're just going to remain much smaller. So my philosophy is we have to be very close. We have to figure out what we're going to be doing together. We've already done 2 M&As with close players. We've done another big partnership with another player in the market. We'll continue to work with people to grow. And at some point down the line, we're going to have to figure out who's going to be the winner. But that doesn't mean we can't work together to make sure that we're both growing at the same time.
Yeah, just to date me a little bit, my competitor, what I concluded was it wasn't the other competitors in the online world. It was the print classified offline world, right? And so I think that is a expanding TAM mentality, right? Where of course you want to win, but you can win multiple ways. You can win by ensuring that technology is adopted and the size of the market grows. You grow together with the size of the market. You don't want to be in a declining market, and so it's actually behooves you sometimes if there's more digital transformation in the sector because it's going to support your business more. And of course, at the end of the day, you'll fight tooth and nail to beat your competitors in every way possible. But it's not a me versus them. It's in some respect with talent and capital and all that. But at the end of the day, I think that that's the right philosophy. And we ended up selling the business and we consolidated the business. We merged with our competitor. And I knew that there would be consolidation at some point. So you want to make sure you're at the table, right? You don't want to be on the menu.
Yeah, absolutely. And I think that's another things that kind of those learnings I think come over time. I remember perfectly taking calls from some competitors the first days at Linio and saying, hey, there's this project that we could go together. And I would say, hey, no way, man. We're going after that contract and we're going to do that on our own. And those are some of the people that later on, when we started working together, even though we were competing fiercely, as you were saying, we were able to build things that made us both bigger. And the competition somewhere else today. And how do you grow that market is what we have to be focused on today.
Yeah, and the reality is that, particularly at the early stage, a lot of times you think you're going to compete with someone, and then there's diverging, evolving models. And so I think that as a second-time founder, I get less obsessed by competitors because you don't end up losing the market and building a business that doesn't work because of competitors. It's strictly based on your own operational capacity and execution. So I think we'll summarize here is that it's good to be friendly. It's good to have relationships. Probably don't obsess too much, but know what's going on. And there might be opportunities to partner, acquire, merge. And that's probably the approach.
Absolutely.
Thanks, Bernardo, for making the time, man. Glad we can connect. It's been multiple times we've kind of ran into each other, and it was great having you at the event the other day. And yeah, man, I look forward to seeing the evolution of Flat. And congrats on everything you've built thus far.
Yeah, so thanks so much for inviting me, Brian. It's always great to talk. Congrats on everything that you're building on your side as well.
Thank you, man.